What's going on? I hope you guys are having a wonderful day. Welcome to the Black Financial Channel. My name is Dr. Boyce Watkins, and I hope everybody's doing well. I wanted to come in really quickly and give you a quick Dr. Boyce daily update on the stock market and what's going on. And just a reminder, don't forget this podcast is on Spotify. So if you go to Spotify and look up the name Boyce Watkins, you'll find a couple of podcasts in my name that I hope can add value to your life as you go on your economic journey and make yourself into the perfect economic soldier. So anyway, today, the stock market is interesting. A lot of tech stocks have been hit pretty hard. Bitcoin has been hit hard. Bitcoin has dropped down to about 90,000, which would have been an absurd number just a few months ago. But now it's a bad number. It used to be a great number, and in addition to that, a lot of tech stocks got hammered as well. And a lot of this has to do with the 10-year yield, the 10-year treasury yield. When that sucker started going up, then that caused a lot of these on risk on assets, as Bitcoin might be called, to actually decline. A lot of these other stocks out there are being hammered pretty hard as well. And most of these stocks were high flyers, actually. I'm going to read here from CNBC. It says here the tech stocks popular with retail investors tumbled Monday as investors took profits on their 2024 winners and dumped the more speculative names in an environment of rising interest rates. Nvidia slumped 3%, Palantir dropped 4%, quantum computing winner Rigetti Computing plunged 22%. 22%. Now, this is really interesting. Rigetti Computing is in the quantum space. I made that list of quantum stocks that I like in terms of stocks that I believe are going to do well in the quantum space when that finally emerges. Jensen Huang, single-handedly popped that balloon. Jensen Huang, in case you don't know, he's the CEO and founder of NVIDIA, and he basically said he doesn't think quantum computing is going to matter for another 20 years in terms of day-to-day life. And I don't doubt what he's saying. I just think that was a heavy statement to make, and it caused a lot of people to be very upset. Now, they were either upset because he was wrong. I think the CEO of D-Wave said he was dead wrong. But then maybe they were upset because their stock prices had gone way, way up. And in the midst of these high stock prices, they were making money. Some of them became billionaires when Google announced their Willow chip, which actually said that basically they could do a computation in 5 minutes that would take 22 septillion years for the fastest supercomputer. And nobody knows. I don't even think we can conceive of what 22 septillion years is. It's kind of an insanely large number, but it was exciting. It was very exciting. But the question still becomes, what is the practical application of quantum computing? Nobody really knows. Nobody really knows. Now, I'm going to read more here. Hit that thumbs up button. Thumbs up, share, subscribe. Also, reminder, tomorrow we're going to meet with Jay Cameron, who's going to talk about our trip to Ghana. We're all taking an economic elevation trip to Ghana. A lot of you are in our morning class, which is 100% free for anybody that isn't a member. I'll give you information on how to join. And we're going to do a class trip, a big field trip. We're all going to go to Ghana and really explore doing business in other countries. In addition to that, Dr. Ken Harris is who we're partnering with for this year's All Black National Convention in August, the weekend of August 24th in Atlanta. Dr. Harris has at least 6 African delegations from African presidents that are coming to this thing. And what they want to do is they want to do business with African Americans. And so Dr. Harris is a great friend, a smart guy, and we're partnering on making this happen. So I'll send you guys more information on that in a second, but I just want to let you guys know what we have going on. We got big things popping, little things stopping up here in the Black Business School. We are the best on earth at what we do, in case you didn't know. All right, so let's keep going here. It says here that among the stocks that declined, Nvidia dropped 3%, Palantir dropped 4%, AppLovin dropped 2%. Now, remember, most of these are stocks that did really well in the past year. So when they drop 10%, 20%, you got to always put it into context. You can't just look at a 22% decline in a vacuum. So, for example, if you look at a company like Rigetti Computing, I'm going to try to pull this up on my screen so we can kind of make this point. So Rigetti Computing, if you look at the stock just, pretty much collapsed today, right? It was bad, just like, what the hell, man? I bought this stock. I'm losing all this money. Oh, this sucks, dude. I hate this, man. This is terrible. Let's take a look. Shall we? Let's see what we're really dealing with right here. Okay. So Rigetti Computing dropped 25%, $2.25. You see that on my screen? Give me a yes if you can see my screen. But look at here. Look at here. Go back 5 days. Okay, 64% in the last 5 days. That's horrible. Oh my God, $11.91. That's just atrocious, right? But go back 1 month. Look, now the declines a little bit. The magnitude declines. Now you go by 6 months. There's more of the story. Now look at that. Look at that. Pause for a moment and look at that. 463%. That was the rise in this damn stock. The stock is a $6.70 stock, and I'm sad for you if that happened to you. But this stock used to cost like $1.50. You go back here just a few months ago, you could buy the stock for 92 cents. 92 cents. Now it's $6.72. So what this reminds me of is consciousness. We every morning we do financial consciousness, which is an awareness, being able to see the big picture, not just seeing the here and now, but seeing the past, present, and future, not just seeing where you are, but seeing all spaces at all times. And what I want you to understand is that when you look at this stock, this you ain't really lost nothing. You just lost something that you might have gained. If you were an owner of this stock when it was 82 cents, you're still partying. These people are still happy as hell. These people some of them became millionaires when they bought this 88-cent stock, and now it's worth 670. But what happens is, here's where you get hit. Here's where you lose. And this is something I want to really impress upon you. You lose if you come in here at this point. Some of us came in at $19 a share. Now you're sad because you lost 2/3 of your money. Do you follow what I'm saying? And the thing is that the reason you got to be careful about market emotion, this is why we created the Black Financial Therapy Department in the Black Business School, because I said we got to get some therapists to help us understand our wealth and how to protect it, is that there are various phenomenon that have been studied through thousands of research papers by financial scientists like myself. That's what I did when I was on the faculty at Syracuse. And they have basically helped us to understand that people getting overexcited about a stock can be a massive wealth loser. When a stock goes up, when this stock was at under $1, wasn't nobody talking about it. All this time, wasn't nobody paying attention. No, wasn't nobody looking. All throughout the first half of the year, then it starts going up. Then it goes to $2, $3, $4, $5, so all the way up to 19. And people are like, "Oh my God!" Ah! And the frenzy takes over. They call that irrational exuberance. There's a scientific term for this. Human beings are hackable and predictable, and so basically, irrational exuberance means that there are some people who show up as investors to the market, and there's some people who show up as gamblers. There's some people who show up looking for the long money, and there are some people who show up looking for the quick money, the fast money. There's some people there for a long-term relationship. There's some people there for a financial version of a one-night stand. And the people that came in for the one-night stand, who got excited and bought this stock when it was at an incredibly high price, got murdered. They got slaughtered. They lost a ton of their money, and now they're walking away saying that investing is bad and it was terrible and I lost everything. So this is one of the reasons why, when a lot of you in class will ask me every day, every time we do class, the students will say, "Hey, what about this stock? What about that stock?" And I'll look up the stock and I'll see something like this. I'll see that it's gone up 400%. And that tells me everything I need to know in terms of why that stock is on your radar. Let me know if you're following this. Just kind of let me know if you're getting what I'm saying. And I know why it's on your radar. It's on your radar because it was on the news. Why is it on the news? Well, because your friends are all talking about it. And why is everybody talking about it? Well, because the stock has gone up 400% in the last few months. And why do people believe it's going to keep going up? Well, because people falsely believe that past performance is an indicator of future performance. And one of the things that I say, and it could be true, I mean, this stock could have kept going up for all I know. I don't know whatever it was going to do. But the problem is that the more stock goes away from its fundamental value, the more risk you have of something like this happening, a bubble just popping, sort of being slapped back into reality. This is unconscious investing. This is what consciousness looks like. Consciousness is more sober than unconsciousness, meaning that if I'm drunk and I'm high and I'm on Molly and Percocets, I'm up here, but when I'm sober after the party, I'm down here, which can feel very depressing. And so here's the thing. In this stock, you were either a long-term investor or a short-term investor. If you were long-term and you bought this stock back before everybody was talking about it when it was 91 cents, then the party's still going for you. You're great. You're in good shape. But if you were the short-term investor and you bought it after all the hype started, then you probably got killed. So everything in investing is about perspective. It's all about when you make the move. And the goal is you want to make the move before everyone else makes the move. If you make the move after everyone else makes the move, then that might not be a move that you want to make, or at the very least if you make that move, make sure you understand the risk of making that move. When a stock gets disconnected from its fundamental value, it is on a tightrope. It is literally on a tightrope, 40,000 feet in the air, and any little gust of wind can knock that sucker off, and then next thing you know, you're splat on the ground. So That's my thought about that bubble popping. Nothing surprises me here. What's happened is that there's been a shift in the fundamentals of the American economy, a shift in the long term Treasury yield, a shift in the expectation that the Fed is going to keep lowering interest rates, and that has led to a correction in the prices of these stocks. A correction. Sometimes people might call that a crash. That's what you're seeing. That's what you're witnessing. Now, if you believe in the long term viability of quantum computing, maybe this is your chance to get in at a more sober price. But even then, remember this: if you look at a company like Rigetti, some would argue that even at 670 is still way overvalued. It's still way overvalued. Okay. All right. So anyway, do me a favor. Please hit the thumbs up button, thumbs up, share, subscribe. We're going to have stock market investing class tomorrow. We do stock market Tuesdays. If you'd like to join our Black Stock Market program, just go to drboycestockmarket.com. That's drboycestockmarket.com. One other thing is we mentioned that in the Black Business School, we have the world's only Black financial therapy department, the first ever, where we study the psychological barriers to building Black wealth. And we have really high level, highly trained therapists. So my wife, Dr. Alicia, is a licensed therapist. She trains therapists on how to get their license. That's how good she is. She's also a full professor of social work. So she's having a mental health Monday tonight. And if you want to join Mental Health Monday, just pull out your phone, text the word love, LOVE, to 87948, LOVE to 87948, because we love you and we want to see you succeed, and we love ourselves and we love each other and we love our community. So type love on your phone to the phone number 87948, and I'll send you an invitation to Dr. Alicia and what she's doing tonight. Okay, so to continue reading here, basically, we've seen the sell-off in these stocks comes amid a rise in bond yields. When bond yields go up, bond prices go down. The 10-year Treasury yield touched its highest level since late 2023 on Monday. A strong jobs report on Friday, meaning the economy is strong, means that the Federal Reserve may not lower interest rates. The Fed tends to lower interest rates when they believe that the economy is struggling, or the economy needs a little bit boost, like a little bit of, like antibiotics. You take the antibiotics when you get sick. So, but you don't want to take antibiotics when you're not sick. So there's basically saying we may not lower interest rates any further because the economy looks to be doing just fine. So it says here, quote, while tech stocks made major gains as interest rates dropped last year, both Wall Street and Main Street have grave doubts about any further rate cuts by the Fed, says CEO Greg Bostic from AXS Investments. Let's see. Monday's moves also follow a losing week for many key tech and quantum computing names, with Truist's Keith Lerner noting that leaders eventually fall in a corrective phase. The co-chief investment officer views the general market uptrend as still intact, but undergoing a reset. That's a necessary part of a corrective phase in our view, and we are likely further along in this correction than many investors recognize, since many stocks peaked in late November, early December. So further along in the correction, I guess hopefully that means the correction might end very soon. This week, a lot of banks are going to have earnings announcements. You're going to see a lot of volatility as a result of that. Other major tech stocks like Tesla's down 1%, Micron's down 5%. Quantum computing stocks that got a boost from last year's positive Alphabet chip announcement also plunged. D-Wave dropped 28%. IONQ lost 10%. The sell-off came on the heels of commentary from Meta CEO Mark Zuckerberg that echoed NVIDIA CEO Jensen Huang's commentary last week, suggesting that useful quantum computers are decades away. Very, very interesting. And you see Zuckerberg's kind of changing his policies a little bit. I think he's shifting with the political winds. He knows that now that Trump's in office, they got to buddy up with Trump, so they're all donating to his inauguration fund. Also, he's announced that he's going to shut down a lot of the censorship that was taking place on the Meta platform. I was personally hit by that censorship. I don't like calling myself a victim, but I felt victimized a little bit because they took down one of our Facebook pages because I quoted Malcolm X. I had 660,000 people on this page. We had a powerful voice. There were people that, like the rapper Young M.A., that's how she got discovered on that page. That's how powerful it was. And literally, it just disappeared just like that. I had an Instagram with 500,000 people on it. That was taken down. So I'm glad Zuck is changing his policies. I wish they would retroactively go back and restore those accounts that were taken away, because, people work hard for that. People depend on that. These were kind of like our news outlets in the Black community. This is how we got certain messages to our people that you're not going to see in mainstream media. So I thought Zuck's moves were good. At the same time, I find it interesting that they don't believe quantum computing is going to have an impact for a very long time. The quantum computing CEOs are mad about that because they literally were billionaires. They were made into billionaires overnight by the inflation of the stock price. So I don't know. I wouldn't say walk away from quantum computing, but I would definitely heed to what they're saying in terms of maybe this is a 10-year, 20-year play. This may not be a short-term play, but remember what I said earlier. Remember what I said earlier. Remember what I said earlier. What I said earlier is that you don't want to get in the game when everybody else is already in it. You get in the game early. So if you believe in quantum computing and you think it's good, then you can go in and dollar cost average $10, $20, whatever per week going into some sort of quantum computing ETF or something like that, and then allow that to grow over time. So IONQ, for example, is one quantum computing stock that I like. I'm gonna probably buy some more shares in IONQ, and I like it also because it's also a great stock to not just for long term games, but it's also good for selling stock options. There's a very active options market around stocks like IONQ, and I'm actually going to buy another 100 shares right now just because I think that it could actually end up coming back up. All right, so anyway, long story short, what I want to share with you guys really quick is number one, if you want to get started on your wealth building journey, feel free to go to blackmoney101.com. You sign up for yourself, and then you can add any family member that you want. It's an introduction to the power of money. I think you're going to like it. Number two, I will text you all a list of stocks, my favorite stocks to buy your child. If you want your child to start investing and you want to get them introduced to the world of investing, I compiled a little list of stocks that you guys can take a look at. Not investing advice, but it's just something that I want to share. So if you'd like to get that, text the word youth to 87948. In case you don't know, in the Black Business School, we have excellent business schools for children. Our children are more financially literate than most adults. So if you want to get your child ahead of the curve, text youth to the number 87948. And I believe the best gift you can give your child is financial literacy. Why is that important? Well, because if you look on the internet right now, you see lots of 20-somethings and 30-somethings, millennials and Gen Zers who are struggling financially. They have to go live with their parents. They don't feel financially secure. There's a lot of anxiety around that. They're not built like us, so they get very nervous. Tell me if you notice this. They like kids today. They get real jittery and they have a lot of anxiety. Well, financial anxiety only adds to the stress that they're already feeling. It already adds to the sadness, the depression, and the misery. So I don't want your children to inherit misery. I'd like for them to inherit some money and some knowledge and some skill. So anyway, if you want to learn about some of our youth programs we have in the Black Business School, text the word youth to 87948 on your phone, and you will get a link to take a look at our financial workbooks for kids, our financial flashcards for kids, and also our Black Business School for children. So anyway, guys, have a wonderful day. God bless you. This podcast is on Spotify. I look forward to seeing you soon. I will update you as much as I can about what's going on in the world, what's going on in the markets. And as you guys know, we do class every single morning, 7 days a week, because we're serious about this and we ain't going to lose. God bless you. Have a wonderful day. Love you. See you soon. Peace.